11 assets that always perform better than cash. It is advantageous to broaden your income source when deciding how to build a financial cushion and avoid being dependent on one particular source of income. This refers to having several revenue streams from various profitable ventures or assets. Avoiding depending entirely on one source of income will help you in the long run by maximizing the benefits of diversification. And while saving money is a terrific way to secure your future, owning other types of assets is just as beneficial. Of course, investment is never simple. Everyone wants to see their money grow with the lowest possible risk and the highest possible rewards. Many of us, however, continue to adhere to the traditional saving concept. Although saving money is a good thing, having other assets is wiser. Since saving accounts and low interest rates are not inflation adjusted, holding or saving cash over the long term may prove to be a liability. That's why in today's video we'll talk about these top 11 assets to include in your plan because they're just better than saving your cash alone. Let's begin with number 1, real estate and land. There will be many people offering you free advice on investments once you start making money. That's for sure. That's why investing in properties is a great idea. Although it is a great concept, it could be difficult to shoulder the burden of monthly EMIs in the beginning of your profession. Consult with a few property advisors to learn about pooling and opportunities. Several people pool their lesser financial contributions in order to buy a fairly priced piece of real estate or land and split the earnings in this situation. Both options, renting out or selling it while the market is booming, enables earnings to be divided among the investors in proportion to the amount of money they invested. This is a great method to get started with investing in real estate or property. Number 2, foreign currencies. The US dollar is among the international currencies that are most commonly used around the globe. They say almighty dollar never goes broke, so investing in this currency, but at the moment the significant currency is prone to significant fluctuations depending on the country's commerce and overall economy. In addition, the variations caused by the pricing of commodities are also affected by the state of the world economy. In such circumstances, it's preferable to invest in currencies that experience less swings and lower rates of inflation. Euro and Swiss francs are two examples. It takes some investigation to invest in a foreign currency. Choose your currency wisely based on the economic, political, and speculative climate of the nation to which it belongs. Number 3, stocks, bonds, and index funds. Investors frequently invest in blue-chip organizations because their core assets, which produce income for shareholders, are more market certain and don't require them to take big risks to stay in business. There are undoubtedly exceptions to this rule, but in general, investors choose to take fewer risks because of their size and maturity. Stocks are undoubtedly one of the best ways to invest. Buying shares in a reputable company, or a budding new one too, can turn out to be very valuable in the long run. Your investment growth is based on how well the business performs and how much it contributes to the relevant economy. Bonds, on the other hand, are a reliable method of protecting your savings. Even while the returns aren't as great as those from stocks or other types of investments, they are still substantially higher than those from banks, and as a result, they're able to take growing inflation into account. When you don't have a lot of time to investigate the particular performance of firms and follow their return history, index funds are consistently your best option. Index funds are a collection of the top-performing securities on that index, and are therefore optimized for performance. The next best share in line will take the place of any shares that aren't performing to the required level right away. Consequently, your investment is always making money for you, just on the basis of the market. Number 4, cryptocurrencies. Yes, you indeed heard it right, the crypto. Recent price increases have made cryptocurrencies like Bitcoin, Ethereum, and even Dogecoin some of the most rewarding assets to own in your portfolio. It should come as no surprise that it's a better option than putting cash beneath your mattress given the rise of fintech and cryptocurrencies. Digital currencies may be a great place to deposit your money with significant returns in the years to come as blockchain technology continues to improve and become more generally used. Number 5, NFTs. Yet another blockchain-related product, another asset that will continue to expand and provide significant returns. NFTs will have a wider range of applications as more people throughout the world use them, which will raise their value. The utility of the internet or mobile phones is very similar. Purchasing NFTs and keeping them in your portfolio could be a wise investment move. Everyone has access to making investments in tokenized assets. Cryptographic assets, known as non-fungible tokens or NFTs, are stored on a blockchain, which is a distributed public ledger used to record transactions. What's its main advantage? Investing in tokenized assets is accessible to everyone. Okay, before we continue, we'd like to ask a few moments of your time. If you want to support us, please leave a like and click on the subscribe button. This would help us create more engaging content for you. Now moving back to where we left off. Number 6, precious metals and gemstones. For investors who want to protect their investments and allow for long-term growth, gold and silver have long been a popular option. Considering the demand and supply curves, the prices of these precious metals only increase with time. So this is a possibility that shouldn't ever be ruled out. Nevertheless, there are other metals available, such as platinum and rhodium. which are more expensive due to their scarcity. As opposed to keeping money in savings, investing in gemstones is also a fair option to do so. Among the gemstones that are frequently purchased and show a reasonable increase in value over time are sapphires, rubies, emeralds, and diamonds. These are the stones you need. Number 7. Luxury items. What is the first thing that springs to mind when you hear the word investment? Well, we've all seen our favorite celebs leave airports with luxury bags and wearing exquisite timepieces. They're not generally attempting to flaunt their affluence, at least not everyone, and not in the typical sense. These expensive products are investments. Luxury handbags and watches in particular are excellent real-world investments. The rarity and fame give them worth. The resale value of the products will only rise because premium labels don't create items in bulk, even in 10 years. Number 8. Vintage motors and cars. For individuals who are aware of which motors or cars do not lose value over time, this is an option. Motorized vehicles typically represent a liability because they lose value over time and need money to maintain. However, the correct kind, vintage, are in fact advantageous. Once you've gained some investing knowledge, you should consider investing in classic cars that are no longer purchased or have a well-known backstory. But for sure, any rare vintage item is worth an asset for you. Number 9. Art. A portfolio of investors include art in a variety of ways. When it comes to investing, diversification is essential, and include art can help you accomplish that. With no link to equities, bonds, and other conventional assets, art is a distinctive asset class. Art tends to maintain its worth as market prices decline. Of course, not all art sells well. The worth of an artwork is increased by being aware of the background history or narrative and how it spreads. Purchasing art is not for the timid, whether it's paintings, murals, handicrafts, or a piece of history or culture, but it can be acquired through a pooling of resources, just like land and real estate. Knowing what you're investing into is important because it's a long-term investment. Number 10. Raw materials and commodities. The commodities market and stock markets are similar. For any novice investor, learning how to choose the best commodities to invest in would be a game changer. For instance, steel is a raw material for several projects around the world and will therefore constantly be in demand and supply in the global economy. Similar to this, given their substantial use in the logistics and shipping of the majority of items globally, oil and natural gas have their own means of regulating the prices of many products. The decision of your investment portfolio would be much influenced by learning more about commodities and the way the market operates. And last but not the least, for number 11, we have the annuities. Annuities function as a contract between an investor and an insurance company, whereby the former invests a one-time lump sum of a series of payments over time in return for ongoing income payments starting either immediately or at a certain future date. Retirees who want a guaranteed income during retirement are fond of these investments. Like contributions to retirement plans like a 401k, and annuity donations grow tax-deferred, and investors can only take these funds without paying a penalty until reaching age 59 and a half. Investors who are thinking about getting an annuity can alter various features to suit their own requirements. A lump sum annuity purchase or a series of payments to the insurer are further options available to investors. The investor has the option to decide when to annuitize or convert into a series of payments received over time the contributions make after purchasing the annuity contract. And that's what we have for you today. Among these amazing assets, where do you wish rely your future into? Let's know in the comments below. If you want more content related to this topic, make sure to check out our channel. Take care, and we'll see you in the next video.